Professional Institute. Um, Today we shall continue with cost of capital, and we are going to examine Gordon's model. Now, how do we determine the growth rates? Growth rates is equals to R times B, where R is equals to return on investment, where B is equals to retention ratio. Now, how do we determine the return on investment? The shareholders will be expecting dividend or capital appreciation from their investment. So the return on investment is calculated as profit after tax divided by capital employed. Now, this capital employed could be defined, could be defined as equity, total assets, net assets, depend on the examiner point of view. So it could be defined as this or this or this, depends on what is given in the question. That is how to determine the return on what? Investment. Now, where B is retention ratio. Retention means that when you have profit after tax, you pay dividend. What do you have is what we call retained earning. Now, what you have after the payment of dividend is called retained earning and also called retention, because that retained earning could be used for what? Investment. Now, retention is equals to profit ratio, profit after tax minus dividend paid divided by profit after tax. This will give us what? The retention ratio. Now, we are going to examine question to determine the growth rate using the what? Gordon's model. R times B. So what we have here and what we have here, we multiply it together, it will give us the growth rate using the Gordon's model. Now let me quickly take you back. In my last video, I said dividend valuation model with growth rate is cost of equity is equals to DO, which is the growth rate, which is the current dividend, plus 1 plus growth rate divided by market value SDIV. I've explained this in my last video. Plus growth rate. Market value SDIV means that the dividend has been paid. The forcible future and the expected dividend has been what? Has been paid, or the dividend has been paid. So this BO is the what? The current dividend. I've explained all this in my previous what? Video. Now, this is under this, how to determine the growth rate is determined using what? The extrapolation and Gordon's model. So today we want to determine, we've used the extrapolation in my previous video. Now we are going to examine the growth rate using the what? The Gordon's model. Now Gordon's model. Now let's quickly do an illustration on this growth rate, on this Gordon's model. Now I have an illustration here showing on your screen. Consider the following summarized financial statement for SL PLC. The name of the company is SL PLC. Please, this question is adopted from ICANN study test. Now, the statement of financial position as at 31st December 2019 is as follows. We're given the assets, total asset of 400, ordinary shares 200, reserve, profit after tax, dividend, retained earning for the year is 24. Statement of financial position as at 31st December 2020. We're given all the relevant information. Now the required. Now, if the company accounting rate of return and earnings retention rate remain the same, what will be the growth in dividend in next year? So what this question is telling us is that if the accounting rate of return and earnings remain the same, what will be the what? The next accounting what? What will be the growth rate in dividend? What will be the what? What will be the growth in dividends in next year? So we are to determine the growth rate. You know, in this question, we are not given the extrapolation series of dividend. So we should know that this is Gordon's model to determine the what? The growth rate. Now, first thing we need to establish from this question is to go back to the 31st December 2019. Now, what do we have there? The growth rate equals to R times B, formula first. Now, here our R is profit after tax divided by the capital employed. Now, we should not forget that the R is the what? Return on investment. Return on what? Investment. So from this question, we quickly go to where we have profit after tax. Now, what is our profit after tax from this question? Profit after tax, as at the end of 2020, is 40 million. 40 million divided by capital employed. Don't forget that I said capital employed could be defined as equity, could be defined as total asset, could be defined as what? Net asset. So for the purpose of this class, we define capital employed as equity. We can define it as equity, we can define it as total asset, but we define it as what? As equity, as total equity. Where we have the total equity of 400 naira, 400 million.